United Auto Workers Union rejected a new offer from General Motors to end that 3-week-old strike. The union said the company came up short on issues like wage demands, health care, and temporary workers. Joining us with more is Pras Subramanian, and this is now the longest strike against GM since 1970, and we don't see a resolution soon. What's going to happen?
You know, I think it's just the whole give and take in the negotiation. UAW is not happy with the latest proposal. They said they had sent a counter proposal. You know, it's about job security, it's about wages, it's about health care. Those three things are sort of kind of like, you know, what these workers want. You know, GM looks at it as if we can sort of, you know, pull back a little bit on the temporary, or use more temporary workers, don't raise prices so much, we could save almost $500 million a year. Now, JPM today said that they've lost $1 billion so far on the strike. You know, they can make that up in, you know, increasing capacity at plants in the fourth quarter. So it's not all lost yet, but it doesn't seem like there is a sort of, you know, a breakthrough yet in the negotiations for these two sides. And
so how many more layoffs could we eventually end up having? Are they giving us any sort of guidance on that?
So these 6,000 workers in Mexico at a transmissions and pickup plant, they've been sort of let go. They can be hired back as soon as they get back online. But I mean, as of right now, there's 6 plants in Mexico that are still operating functionally full capacity. Those could go offline too, because you know you have these parts that are not coming from the United States to build these trucks and vice versa. So if it drags on, you could see less and less capacity, less and less production, and that could affect GM's Q3 and Q4.
What are the potential contagion effects from this strike? We were just talking about manufacturing in this country, 12% of GDP, but when you get to a company like GM, tentacles, and not in a negative way, in so many different sectors, do you worry about contagion and slowdown in other areas?
I would view it as very much a late business cycle type activity, right? So a year ago, when labor market turnover was quite robust and wages were going up because productivity was going up, that was a favorable mix. A strike at a major auto company because they want higher wages and more benefits is more late cycle type activity, which carries with it, you know, less productivity and or inflation without any real benefits associated with it. So to me, it's really more an effect than a cause.
Well, and when you talk about contagion from this, you know, the end of next week is the reference point for the October jobs report. So if the strike extends through then, you could start to see some impacts in the October numbers, which we'll get in early November. But just think about how this market might react to a bad jobs report. I mean, we're on such pins and needles right now with negative economic headlines, even though this would likely be a one-off item in terms of job impact.
The ISM number was actually affected by this strike too.
Yesterday.
So So you're already sort of seeing this spillover and this contagion maybe happening now.
And yet, though, I mean, we talk about just GM, but broaden it out. Ford was out with its third quarter sales numbers, and they had strong sales in pickups, record sales for vans. I mean, is this what GM might lose going to go to the other automakers, or will it be contained? Well,
it depends on the labor market, right? Because if the labor market weakens and consumer confidence takes a hit, then sales will dissipate. But this month's numbers were good, so far not.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.